Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Monday, July 27th. We have got a big week of quarterly results ahead. Wednesday, we've got Microsoft, Meta, Robinhood. Thursday is Apple, Amazon, Coinbase, and Reddit. And tomorrow, we have PayPal, which should be interesting to see in light of reports that there has been acquisition interest for that company. We'll be covering all of those results this week, so stay tuned to our shows. Today on the show, we are unpacking initial reviews on Anthropic's Opus 5 model. We're bringing on the head of AI at Clay to talk about that. We're then going to speak with a former top White House official about her view on the debates that Kimmy K3 has sparked around AI policy. We've also got some new reporting on how Google is taking a page out of Wall Street's ambitious approach to debt as it seeks to finance its AI build-out. And we're going to close out the show with a conversation with our partner, PwC, for a broader look on where Fortune 500 businesses stand on open source AI and how they're using it. It's going to be a busy show and a busy week, so let's get right on into it. Anthropic on Friday released its latest Opus 5 model, which means developers were very busy over the weekend seeing what the new model is made of. I want to bring on Jeff Barg, the head of AI at AI sales engineering company Clay, for his thoughts on all this. Jeff, welcome to the show. It's great to have you here.
Thanks so much. Yeah, thanks for having me.
So, busy weekend. Were you playing around with the new model?
Yes. Busy weekend. I think we spent a lot of time both evaluating the model for our internal use cases, how our customers will use it, and as well just trying to use it as a personal coding agent. So
Right.
it was a busy weekend.
And so, what's the review?
Yeah, the headline is it's really good. I think it's always interesting to see what happens with an Anthropic launch because sometimes you see some benchmarks and then they don't replicate in either vibes or in actual eval results from our internal evals. I think here the internal benchmarks that we had pretty much matched what Anthropic said publicly, which is really close to Fable's performance at a fraction of the cost. And we were seeing I think Anthropic said about half the cost of Fable. We were seeing even more than that. So maybe a third or even less of the cost of Fable and really close to the performance across some of our hardest evals.
And
Um,
what about GPT 5.6?
yeah, I think it's a really hard, they're playing in a really hard space because actually 5.6 comes in just around the same as both Fable and Opus 5. And it's even cheaper than both of them. So I think Anthropic's really playing in this hard middle ground where they have the frontier. Fable seems to be really doing well at frontier performance and writing, in quality of code, etc. But in this kind of tier two where you have I don't know, just the daily workhorse model. It's not really a tier two, but your kind of daily model for doing things. I think Anthropic faces some pretty steep competition from OpenAI.
Interesting. So, I mean, that's the benchmarks and the evals. What about the vibes? I mean, this is kind of an interesting soft metric, I guess. And I think, I mean, when it first came out on Friday, it seemed like some people weren't too bullish on the vibes here. Unpack that for why do you think that was the case?
Yeah, it's been interesting. I think every Opus launch has had this kind of reception on arrival. I'm thinking back to the Opus 4.7 launch, where I think it was maybe based off of a new pre-train. A lot of our internal users at Clay really didn't like Opus 4.7, and that's when actually a lot of folks started moving over to Codex and the GPT series models. I think with Opus 5, the vibes are good. But I think most users internal to Clay will continue to use Fable. I think the vibes on Fable are just so immaculate and just sort of effervescent. Like there's just there's something to the quality of the writing and the sort of intangibles that are really hard to replicate, I think.
And I guess, but you're saying that because even acknowledging the tremendous cost of Fable, you think people are still going to be using that?
I think so. I mean, it's really hard to say for daily users, especially on non-enterprise accounts. So really the Claude Max user base. I think a lot of people are going to move to Opus 5 and probably get pretty good performance there. But there's just something really special to Fable. I think inside of Clay, we'll see a lot of users stick with that.
Yeah. What do you make of the timing of the release here? One of the things that we talk to developers a lot about is this cycle of when your company is in the headlines, when your company's getting good headlines versus not so great headlines, when you decide to release Opus 5. I mean, does it feel like strategic timing to you in terms of the release schedule?
Hard to say. I think the recent I think the recent thing that we think a lot about internally at Clay is just all of the open weight models and how close that those are getting to the frontier. So I think it's really the timing of Opus 5 seems to relate to that in a pretty interesting way. I think we're spending a lot of time really migrating a lot of our workflows to open weight models, and there's been obviously a lot of movement in that space.
Well, and say more about that. Which models are you using in the open weight category?
Yeah, I think like the open weight models are much harder for us to think about. I think if we look at our internal evals, open weight models tend to be very spiky. So some of the evals they do really, really well at, and some of them they're much worse than many of the frontier models. We use GLM 5.2 and KMK 2.6 pretty extensively at Clay now. We just launched it in Claygent, which is our main research agent, but we also use it in Sculptor, which is our go-to-market engineering agent. So more of a typical kind of coding adjacent use case. Um, I think we're seeing for GLM 5.2, sometimes it's at the top of our evals, but it's truly a fraction of the cost of even, the cheaper OpenAI models. So it's really kind of a pretty interesting, it occupies a pretty interesting space, at least in our, in our model usage.
So, what percent of model use at Clay is now open weight models versus frontier models?
We're still majority frontier models, but
Okay,
I would say it's increasing as a percentage fairly rapidly. And I think
right.
we're investing a lot of time on the engineering team here as well.
And so I'm going to go back to you're using Kimi K. Is it the most recent moonshot model that you're using, or is it models before that?
2.6,
2.6. Okay.
yeah, yeah.
And so, I mean, walk me through sort of your considerations here on using models from overseas versus models from the US. I mean, Clay, just to recap, I mean, you guys are building out the go-to-market engineer, the sales engineering role, I guess, that AI has now enabled. So, I mean, you have a lot of data from customers about their leads, their notes from customer conversations, stuff like that. I mean, this is all fairly sensitive stuff. So how do you think about the decision to use models from overseas from a security perspective?
Yeah, and it's important to note we host all of our models with Base 10 and Fireworks. So all of the
Okay.
models are yeah. So we host with inference providers that are located stateside. Um, but yeah, it's an interesting consideration, and I think especially with sort of the push or the potential conflict between the Trump administration and some of the open weight models, I do think it's very important for the U.S. to have strong open weight models like the ones that we're seeing from NVIDIA and thinking machines and others.
Great. Last question for you, Jeff. I mean, when you look at Opus 5, I wonder what it tells you about Anthropic's strategy overall with their suite of models. I mean, I sort of think about which company is positioning themselves at like in the premium model category versus the cost leader category. Fable is an expensive model. When you think about the Sonnet, the Haiku, the Opus, and then the Fable family, where could you see Anthropic taking this suite of models given what we're seeing with Opus?
Yeah, I think Anthropic's strategy is very interesting here because um, we're seeing basically they're moving away from the lower end of the market here. Um, it sounds like they're not going to have a Haiku 5. And I would say for us, we really think about Opus 5 as almost the spiritual successor to Sonnet 4.6. Actually, like a lot of our workloads that we were running on Sonnet 4.6, we're going to run those on Opus 5 now because the increase in cost actually does come with a material increase in performance in a way that we weren't really seeing with earlier iterations of these models. And so I kind of think about it as all of these models are effectively moving up a weight class, right? Anything that we were running on Sonnet, we'll now consider Opus 5 for, and any of the frontier workloads that we have where you're really looking for the best in class performance, we'll really consider Fable or kind of Fable class models there.
Or you could just move everything open source, which it sounds like everyone's interested in doing anyway.
Yeah, it's absolutely. I think that's it's really in the conversation now, and I
Yeah.
think really something we think about actively in a way that a year ago we were using open source models a year ago, but it really wasn't in consideration for these
Yeah.
frontier
And
workloads.
it's a material cost advantage for you guys to use open source?
Absolutely. Yeah. I think both in terms of the percentage of savings, but Clay just has a lot of inference spend across the board. And so
Right.
any kind of marginal improvement is material to our business.
Great. Well, Jeff, I want to thank you for coming on. That is Jeff Barg, head of AI at Clay here on TITV.
Thank
Moonshot AI's Kimi K3 has sparked much debate around open and closed source AI. And meanwhile, OpenAI's Hugging Face hack debacle has raised a lot of new concerns about AI security. I want to bring on Theresa Payton for her view on all this. Theresa was Chief Information Officer at the White House under President George W. Bush. She is now the CEO of Fortilace Solutions. Theresa, thank you for being here.
Thanks for having me.
Okay, so tell me a little bit about your view on the open source, closed source AI debate that has been playing out. What's been your reaction to it?
Yeah, I mean, I think it's a really interesting debate that we have going on right now. What I am advising business executives is obviously, given where we are with AI right now and not knowing what puts a firm in the penalty box and what allows the firm to come out of the penalty box, that's a good idea to have more than one vendor and to think about that from the standpoint of resiliency, recoverability, security, but also just making sure from a supply chain you don't get cut off from something that's considered mission critical. The argument that's happening right now is really interesting to watch unfold because as you see, some of the heavyweights, many of which are in sort of the United States, Silicon Valley, in AI, you're starting to see two different camps of emerge as to whether or not we should allow sort of this open source and open weight models, many of which are lower cost, maybe not as good, but maybe good enough, versus sort of the closed model concept. And I think there's a lot more to unpack there as to which one
Yeah.
is the
So
right.
where do you stand on that debate? Should there be regulation on open source?
There should be regulation of governance and guardrails on any of the models, whether it's open source. We use open source code bases today, not AI, but open source code, which has really helped propel development teams forward over the past several years. But we need governance and guardrails for both, not just
Yeah.
one versus the other.
I've been trying to figure out. So all this conversation came up because Kimi K3 was so powerful. People were very impressed by it. The conversation initially was around regulation of open source models coming from China and from overseas broadly. That then drifted into a conversation around open source altogether. And I've been trying to figure out why it is that companies have taken this approach that we need to remain open on regulating open source AI when the Kimi K3 issue was a little more isolated than that, right? I mean, this was an issue of the model coming specifically from China that was the concern. So why did these two issues get conflated?
Yeah, it could be that there's just so much going on right now as it relates to AI that the issues got conflated. What I wod say is this, businesses have to look at dollars and cents. They have to look at their bottom line. And as we see the closed models ratchet up in price. And in some cases, many firms are saying, hey, what used to only cost me a couple tokens in the past, and the sort of the newer closed models that are being released, it's costing me more tokens and costing me more money. And they're looking at more, alternatives that are more cost effective and maybe just as good or just good enough. So it's very interesting to sort of see almost like an anti-competition uh, thing sort of evolving here in the discussion. What I would just say is like free market competition is good. What I would always caution is be careful, make sure you get what you pay for here. And you want to make sure that you've got your own internal governance and guardrails to make sure that your business is safe and secure if you're using open source models, regardless of their origin story, which country they were built in.
Why do you think China has developed such an advantage in open source models specifically?
Well, there's a couple of things at play here. First of all, they were banned from using some of our most powerful chips. And, sort of the necessity is the mother of invention here. So they had to get by with chips that weren't as good as some of the chips that many of the American companies had access to. You also see over the years that China, although they deny this, they are incredibly good at doing sort of copycat technology. So, sort of studying, looking at what's being used, and then being able to leverage intellectual property and doing, just good enough and copycat technology. I have heard from people who've gotten their hands on the model that the models are not as advanced and sophisticated and optimized for token use as some of the American closed models are. But for many businesses, that may be just good enough. Now, I think the debate is still out whether or not there is a true security risk with these models just because they come from China. I would love to see tests run in the lab, and I would like to see the results of those tests.
So you haven't yet made an opinion on whether or not you think there is a security risk from these models.
I think it's okay to assume there might be, but let's before we start accusing just because a software product had an origin story of China, let's put the proof behind the details. Let's do the work. Let's get it in the lab, see what the vulnerabilities are, and then let businesses decide for themselves based on the facts. Can they actually mitigate any security vulnerabilities that have been found? Right now, we're just saying, oh, it's from China. It must be dangerous.
Right.
We really need to see those results.
Has your team or the orbit of companies that you work with, I mean, you work in the cybersecurity space very closely. That's what you've built your practice on. Are there any early indications, results? Have you ran any early tests that could give us a view into that at all?
Yeah, the early tests that I've seen have been looking at if you've downloaded the model and you're using it in your own sandbox, how can you actually protect and secure it? That has its own downsides, right? Because you have to make sure you can update the model and that you're not going to kind of break the threads of things that you've built by updating the model. But most of the focus right now has been on how effective these models are in solving problems. How long does it take? How expensive is it? As far as coming up with sort of the major national security vulnerability, my team is still in conversations with teams doing those tests. We have not heard anything definitive that says, aha, here it is, here's the smoking gun. But this takes time. It takes time to find those hidden back doors. And we
Is
have
this like weeks or months? I've never done any of these tests before. So I mean, how long should we expect it to take?
Yeah, the analysis oftentimes only takes a few weeks to do, but I will tell you that even the best trained software looking for these vulnerabilities, powered by the best practitioners, you still might miss something.
Right. Well, and to that point, so then let's talk about the OpenAI Hugging Face debacle from last week. Were you surprised when you saw that headline?
I wasn't surprised. A couple of things about what this is and what this is not. Yes, obviously, what it is AI jumped the guardrails, went and hacked another company. The other company, in order to be able to protect and defend itself while it was trying to figure out what was going on, they actually were almost like firefighters locked in a closet, couldn't get out. They actually used open source, open weight
Right. I
models to
mean, that's what I
defend.
read in the report this morning. That it ended up being that open source models from China were actually better at protecting them.
Yeah. Yeah, exactly. Now, what we do want to talk about here is this is not a commercial product running a commercial enterprise that jumped the guardrails. This was tests going on in a lab that jumped the guardrails and hacked another company. So I think we have to ask the lab a lot more questions. Just like we ask labs that work with live viruses. What protocols are you taking to make sure it doesn't just jump through the doors and start infecting the public? We have to do the same thing here. I'm starting to feel like there's not enough of those kinda like hazmat-like situation governance and guardrails on the tests that are being done in these labs. So, sadly, I'm not surprised that it happened, but there's a lot of lessons learned that we can take away from this, starting with, if you're gonna be doing these tests in these labs, make sure you've got the right governance and guardrails so you're not attacking another company. Let's not do this again. Let's not repeat the same mistake.
Right. I want to ask you about regulation, broadly speaking, given that you were in a government position for a little while. We've been thinking on the show here about the levers that the government could pull as it relates to governing AI, regulating AI. On one hand, you have the chips, right, which has been a point of regulation in the past. We also have the data centers and where the data centers are actually located. You have the software. Which lever do you think is most likely to get pulled here as the government seeks to regulate AI if they decide on, delineating between open source and closed source? How do you actually do it tactically?
Well, I would say the challenge that we have right now is incentives are not aligned. So you have the incentives of businesses, incentives of national security, the incentives of, so you have the businesses that are the AI companies, then you have business executives who are trying to figure out how to implement AI. Then you have ordinary citizens like you and me. So we have all these different stakeholders, and our incentives are not aligned. And so if we can find those common grounds where we can have alignment, then we will have alignment around some key issues around where do data centers get built and how aesthetically pleasing and environmentally friendly, and do they
Right.
make good neighbors as it relates to regulation around safety, security, ethics, and resiliency. We have to align incentives. So for example, many of these companies today are not inherently profitable. What if they were given R&D tax credits that didn't expire or had a shelf life of 100 years, so that one day when they are incredibly profitable, they made the right decisions now because they had the right aligned incentives? That's where I see the disconnect. So there's a lot of things to focus on right now, but if we actually strip all of that away and actually sit down and say, where are incentives aligned?
Yeah.
Where is it that we all want the best for each other, and then get the things in place around
But
that?
but uh, but I'm asking. So when you strip it all away, I'm sort of asking, where do you think the government should focus its effort? Should it be on regulating the chips? Should it be on the data center location? Should it be on the reviewing the model release cadence schedule? Like, which lever do you think they should pull on first?
I think this is a tough one. I mean, obviously, AI is another technology, just like we have data centers today for, processing of banks information or healthcare information. We need data centers tomorrow for AI and other technologies coming. So what I would say is that we need to focus on the governance and guardrails of the actual technology itself, but that pretty quickly it needs compute power to run. So we really have to have this debate now, sooner rather than later, around data centers, compute, chips. And candidly, many of these are age old problems that we've been kicking the can down the road for a while. So,
Right.
start with the
Right.
governance and guardrails on the software, and then the rest should follow.
Right. Great. Well, Theresa, I want to thank you for coming on. That is Theresa Payton, CEO of Fortilace Solutions here on TITV. Google reported quarterly results last week. Our AI and finance reporter Dakin Campbell has new analysis on why Google's balance sheet might underrepresent the amount of risk that the company is taking on. I want to bring on Dakin to explain what exactly is going on here. Dakin, welcome back to the show. It's great to have you here.
Yeah, thanks so much.
Okay, so Dakin, you wrote about how Google is taking a page out of Wall Street's playbook, especially with respect to how it's thinking about debt and loading up its balance sheet. Explain to us a little bit about the analysis that you did.
Yeah, so we were looking at their balance sheet and we noticed that they had, starting last year, they had a new kind of derivative that they were reporting on their balance sheet, which we had not seen before in Google's results. And it relates to these backstops that they are providing for data center leases. So Google has committed to about $44 billion worth of backstops on leases for data centers. So these are companies that are building data centers and leasing with a third party. In many cases, it's Fluid Stack. And in order to sell the debt that will allow them to build the data centers, they're getting Google to come in and basically guarantee the leases on the back end. The debt investors and people who buy the bonds are looking at the leases. That's the money that's coming in. And so they're worried about whether that money is going to keep coming in to help repay the bonds. And so Google is basically committing to backstop those.
So they're the guarantor. I mean the
Yes,
neo
it's almost like
clouds,
insurance. It's
right?
almost like insurance that they're providing on these
Or
leases.
like New York City rental guarantors, which
Sure.
can be pretty. They're pretty steep requirements a lot of the time. So, okay,
Yes.
so Google the guarantor. What is the magnitude of guaranteeing? I guess that Google is doing here.
Yeah, so they have committed to $43.8 billion of guarantees so far. They've said in further in the footnotes that there may be another $24 billion in guarantees. So added up, that's 68 billion currently on the books or coming. And there's an expectation among some people, among credit rating analysts that we talk to, that this will continue. So it's getting a few more quarters of this, and you might be getting closer to 80 or $100 billion.
Okay. So now let's get to the heart of the matter here. How much? $100 billion maybe coming in possible obligations if any of this goes south. How much of that is represented on its balance sheet?
So because they have represented it on the balance sheet as a derivative, they basically look at this exposure. So right now it's 44. Just bring it back from 100. Right now it's 44. They look at how probable they think it is that they're going to have to pay out on these. And right now they think they've recorded it as a derivative on their balance sheet, and they've got it marked at 815 million. So we're not at a billion yet.
That's like what? That's like 1 by 44. That's like 2%, basically.
Yes, it's 1.83% or something.
Okay.
Yes.
Okay. Do people is that realistic? I mean, you talk to experts about this. Is that fair?
I think it is. It goes into the assumptions that Google is making about its ability to pay out, or it's the likelihood that it's going to be paying out. It's a little hard to know exactly what those assumptions are. They are assuming that if they have to take over some of these leases, they'll get capacity for themselves, or they might get other things that will reduce their actual money out the door. But the thing to keep in mind is if they're in a place where they have to take over these leases, so they have to act in their guarantor, the entire AI ecosystem might be in a very different place. So they might be taking possession, for example, of a data center that whose lease they take over at a time when they don't need the data center, because we've decided that AI compute needs are much smaller than we expect they will be right now, or companies aren't using AI as much as we expect that they will be. So a lot of it has to do with what the future looks like when some of these guarantees that they've provided take over, and it's really hard to know what that is going to be. Now,
Right.
Google says that they say in their filings a little bit that in the case that they have to act as a guarantor, so they have to take over these leases, they have various measures that allow them to recoup some of their costs. So they can take over the lease themselves and run it as a Google data center. They can sublease it out. So maybe Microsoft at that point needs a data center. Google can sublease it to them, or those are sort of two of the big ones
So
that they have at their disposal.
So let's talk about the other side of this story, which is that I mean, Google just reported that it's burning cash in its latest quarterly results. It now you're telling us, the balance sheet, and by the way, we should point out, I mean, this is all above board. They're not
Yes.
they don't need to capture the full amount of these obligations on the balance sheet. They have the footnotes there. They make it clear and stuff like that. So there's nothing wrong here per se, but I'm just wondering from an investor's perspective, is this is it affecting their credit worthiness? How are they're issuing a ton of bonds, right? What is it? What impact is it having on that?
Yeah. So thank you for adding the caveat here. I mean, Google's balance sheet is $912 billion, I think, somewhere around there. We're talking about a derivative that's less than $1 billion held on the balance sheet at this point as a liability. So it's a very small amount. That said, what we're saying with our story is this is definitely a number that investors should be looking at and should be following in subsequent quarters. And honestly, we are starting to see some credit rating agencies come out and note these backstops. Basically, Moody's last week came out with a report that said, that they're paying attention to this and that it might have an implication. We are definitely not um, seeing anything related to Google's credit rating being downgraded as a result of this or being under threat of being downgraded. Certainly not at this point in time. We'll have to see what the numbers do and how many more guarantees they sign in the coming quarters.
So the last question I have for you then, Dakin, is, so investors should be paying attention to the fact that these guarantees exist and that they are a possibility. Looking ahead, given what you said about the fact that Google having to cover some of these leases, that would be emblematic of a broader issue in the AI ecosystem, which is that the data center companies can't get enough business for their data center build-outs. What signals should we be watching for going ahead here to sort of suggest to us that maybe the story is going in the wrong direction?
Hmm. Yeah, it's a good question. I mean, one thing that people are mentioning to me, and this is no great insight, I wouldn't think, but the fact that Meta and SpaceX are selling excess compute at this point in time, that is a possibly anecdotally signs into the idea that compute demand may be softening in some parts of the ecosystem. We could also look at a lot of Google's partners in here, or a few of their partners are publicly traded crypto miners that are pivoting to AI data centers. So companies like Hut 8, Cipher Digital, TeraWulf. And so a lot of the folks that I'm talking to are following those stocks and following the bonds that are issued by those companies and their subsidiaries as a window um, into the ecosystem and how things are looking. They're much more, because of their size and because of their business mix, they're much more reliant on Google and on the ecosystem to be performing than Google is. Google's a massive company, one of the biggest companies in the world. Like we said, this derivative is a tiny speck on its balance sheet at this point in time. That's
Right.
not true for some of these other publicly traded companies that are partnering with Google. And so watching them gives you a little bit more of a signal as well.
Great. Well, Dakin, I want to thank you for coming on. That is Dakin Campbell, our AI finance reporter here at The Information. Our next segment is with our partner, PwC. The firm has a great look into how enterprises are thinking about the open source AI adoption challenge right now. To comment on all of that, I want to bring on Dallas Dolen, tech, media, and telco industry leader at PwC. Dallas, welcome back to the show. It's great to have you here.
Akash, great to be here. Great to see you.
So let's talk about how big businesses are thinking about open source AI right now. I mean, we talk to startups here on the show all the time. Some of the leading, fastest growing startups, disruptors in the industry. I mean, they're all turning towards open source right now. You work with bigger businesses, corporations that have tens of thousands of employees. How are they thinking about the open source AI adoption challenge right now?
Look, it's a great question. We are absolutely seeing, a high degree of interest and some usage, especially in the engineering teams with these large enterprises. The number one factor, that's coming into play, of course, is going to be security, and in particular, data security. So I actually talked to our data leader, our security and data leader this weekend, and we had a conversation about what's the demand cycle looking like, and she said, yeah, like absolutely, everybody's asking about it, and ultimately, if you can keep the system secure, maybe it matters a whole lot less about what models you're using, and that seems to be a direction of travel here, especially as inference costs on the most powerful models continues to go up. At least that's what the current demand cycle is forecasting.
So security, I mean, this is kind of interesting because uh, and we were just talking with someone earlier on the show about how open source models can sometimes mean they can be less secure in some cases because of the fact you have to download the model. Then it's up to you to sort of make sure the model is updated and up to par with the latest security standards. On the flip side, it means you have more control over the model itself. And, so where on that spectrum, how do you think about that security on that spectrum of considerations?
Yeah, well, it's like any other, call it model system, Akash, right? So it's the, where do I want to put my energy and money? I guess when you think about it from that perspective, it's the, age old idea of if something's operating on prem, do I have a lot more control over it, including, what's going in and what's coming out and where it can go? If you think about, the case that we're looking at here in terms of open models, you're right. If you're downloading it, you're running it in your ecosystem. You're taking on an ownership of the compute cost and certainly of keeping the system updated. But you have a lot more control. Some companies may say, "Hey, that's great. I really want that." Other companies may say, "Hey, I still love the idea of being able essentially to outsource that entire ecosystem play to a Anthropic, OpenAI, Google, and just say, hey, look, I'm willing to pay a quote premium in order to not have to worry about the APIs, not have to worry about the security, not have to worry about the compute power." I think it's, we're getting to this point where there's kind of this convenience factor going in. It really pushes us in the direction from just a pure, I'll call it macroeconomic thesis of, what is a commodity versus not. And it actually came up in my household last night. My kids were roasting marshmallows, and my son says, "Hey, did you know if you put petroleum jelly on a piece of paper or wood, it actually burns a lot harder to burn the marshmallow?" He didn't say Vaseline, but everybody thinks about Vaseline and they say the same thing. And I think you're going to get, along the same lines as that sort of macroeconomic, dynamic. By the way, note the marshmallows got completely torched last night because of the Vaseline application to
Right. So, okay, hold on. I don't want to let this go. So
Yeah.
I'm missing the analogy. What does the Vaseline and the marshmallows tell us about the AI
No.
storm right
It's
now?
it's the concept of petroleum jelly is the same thing as Vaseline, but no one runs around and talks about using petroleum jelly except for the fact that they used that term in the YouTube video that my son was watching where he learned this technique. And it's the same thing as it relates to these open versus closed models. I think it's I want to buy the named product that has all the security of knowing that it's everything that I've always trusted before, right? That premium non-commodity dynamic. But
Yeah,
maybe but otherwise for a non-commodity dynamic, right? Like, or for the commodities, I'm going to have to pay more, or sorry, pay less, but I might have to do more to make it work. Maybe I
right,
don't trust it as much. There's more there.
right. So, okay, on the open source opportunity debate right now that is going on right now, how do the larger enterprises think about then models coming from overseas, not developed in the US, models coming out of China? Are there concerns there? Are they still adopting them? Where do the large corporations stand on that?
Absolutely. I think we're seeing that even publicly. We've seen a number of companies who said they are, but I think where it gets a little bit dicey, from an application point of view is, do you eventually, whether advertently or inadvertently, run into some type of regulatory or geopolitical, matter as it relates to using that model, right? I think we saw some news last week about distillation, the potential for investigations by the US government on perhaps, somehow these open models coming out of China are being built. Same questions might come up as it relates to, the models themselves, whether it's because they use a certain chip that's been banned from an export perspective or the technique that was used in order to build it. Either way, the possibility of an enterprise adopting a technology that might have a limitation put on it later, I think is the biggest concern. And we saw that same thing as it relates to some of the, frontier models and some of the, applications that were there. People were worried if I get this and I start using it and I get shut down, I'm a company, I have hundreds of thousands of customers and tens of
Right.
thousands of employees. I can't change quickly. They're going to want something that's reliable. Reliable is measured both in terms of, does it actually work, and is there a possibility that somebody shuts it down? And it's trying to avoid both of the pitfalls of those two things failing at some point.
In other words, it's not even a question of, um, it's not even a question of what works best. Sometimes it's what's less likely to get regulated out of me being able to use it, as a big consideration.
100%. 100%. I
Right.
think that's the biggest concern that we have right now, especially with the Chinese models. I mean, there's still, the significant breakdown there. Although you guys had some great news this morning as it relates to, some of the techniques and technology that the Chinese chip makers are now getting a hold of. So
Right.
a lot of this may, continue to fall in terms of the height of the wall. but it's still a real concern today.
On the regulatory side of all this, one question that we've been talking about on the show is where the government should focus its regulatory efforts. Do you focus on the chips? Do you focus on the data centers, on the software, on the model releases, reviewing that? I mean, if you look at the spectrum of opportunity, what do you think? What are you and your colleagues thinking about? Is the highest ROI, I guess, in terms of how to regulate AI?
It's an interesting way of looking at it. I don't know if the government has a really great application of ROI and how they might measure it, but
Your
with all
words, your
respect,
words.
yeah, I said it. Come after me, I guess. But nonetheless, I think the reality is if you start at source, I mean, all of this is going to go back to compute. And so if this really truly is something where the U.S. government is concerned and wants to maintain some sort of competitive edge for U.S. companies against Chinese or other geopolitical foes, real or stated as they are, you're going to have a situation where compute will still be the number one thing, and compute is a derivative of two components, which are energy and then the chips themselves. And so I think it's going to actually fall back to that, even though we've spent the last couple of years having really heavy debates on the models themselves, and there may be some evidence of behaviors that we don't like as it relates to distillation and how these models were created. But nonetheless, the actual regulatory features and what they're going to lean into will continue to be chips. It'll continue to be perhaps energy production and certainly, the manufacturing components associated.
The physical stuff, really.
The hard physical stuff. Yeah.
Right. Yeah, and I mean, it's certainly easier to track some of that stuff too, because I mean, in some cases, I mean, this is a conversation we've been having too, is that uh, it's hard for the cloud providers at times to differentiate between, well, what is the origin of this open source model? If you are regulating an open source model coming out of Asia or out of China,
Yep.
what does that mean for regulation of open source models here in the US? And then you have the letters being put out saying, well, the US should be a leader in open source as well. So it's harder to do on a software perspective.
Absolutely. I mean, and what's interesting is, and stats matter, right? Like, and I think this will continue to play itself out. But I think 80%, this is according to OpenRouter, 80% of all token usage right now is still on the quote closed or at least frontier models. They may have a couple open models in there, but 80% of total traffic in the Western world that OpenRouter can track, being there. The encouragement of use of open models might be something that gets of Western open models, just to be clear, might be something that confers an outcome consistent with other regulations, but doesn't force the U.S. government into a position where they'd have to, go and come up with a method for doing the regulatory thing that might be very difficult. To your point, how would you regulate some of the some of the dynamics as it relates between open and closed and China and U.S.
Yeah. In other words, the second the U.S. has a killer open source model, this whole conversation becomes very different. So
yeah, it'll continue to evolve. But see, top part of our
Yeah.
conversation, right? You're still going to have that dynamic of how much effort do I want to put in as an enterprise, right? Do I want to put in all the effort to to build the thing and create the APIs and do the security and keep it up to date, or not? I think you're going to continue to have like a refinement of enterprise decision making there, but you're not going to have as much to the consideration of, oh, is it West versus East? It's going to be, is it something that I'm comfortable with in this open source, dynamic? I think people are getting much more comfortable with it, including the fact that it probably runs, somewhere between, 75% to 50% of the cost, of the closed frontier models. That's the other critical piece.
Great. Well, Dallas, I want to thank you for coming on. That is Dallas Dolen, tech media and telco industry leader at PwC here on TITV. That does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. If you can't make it then, episodes are available on theinformation.com, on our YouTube channel, or wherever you get your podcasts. Make sure to follow us on social media, on X, on Instagram, on LinkedIn, and on TikTok. I'm already excited for our next show tomorrow. Have a great rest of your Monday. Bye-bye for now.